The RSI is the most popular indicator for identifying overbought zones, oversold zones, and other conditions in the market such as potential reversal zones. While the RSI is a commonly used indicator, it has a few big limitations that cause it to be unreliable in certain market conditions. The main one is that the RSI only considers price movements, which means that it may not accurately reflect changes in volume and market momentum. This can result in false signals and unreliable trading decisions. Luckily, there is an alternative to the RSI indicator, which is the money flow index. The money flow index takes both the price and the volume into account, allowing it to be a lot more of an accurate indicator of market momentum. This is because by considering the volume of the market, the MFI provides a more complete picture of the market sentiment and can help traders identify significant price movements before they occur. Since the money flow index works a bit differently than the RSI indicator, let's first take a look at how it works and how we can use it. When the typical price, which is the sum of the high, low, and close divided by 3 is multiplied by the volume, we will get the raw money flow. Then to calculate the money flow ratio, the 14-period positive money flow is divided by the 14-period negative money flow. Then finally, the money flow index is calculated by subtracting 100 divided by the money flow ratio plus 1 from 100. This is how the money flow index is calculated. Now that you understand this and know how volume is integrated into the money flow index, let's take a look at how we will read the indicator. Let's first add the indicator to the chart. To do this, head over to the Indicator Search tab and search for the Money Flow Index indicator. Select the indicator made by TradingView and add it to the chart. Now that we have added the indicator to the chart, let's change the colors of the indicator to make it more visible. To do this, navigate to the Indicator Settings and click on the Style tab. We will be changing the color of the Money Flow Index line to white. After that, we will be removing the background plots. That was all that we needed to do. Now let's take a look at how we will be reading the indicator. The money flow index indicator consists of 3 lines: the overbought line, the oversold line, the middle line, and the money flow index line. There are many ways of reading the money flow index, so let's cover a few. To be able to properly know what the money flow index is indicating, it's important to pay attention to the value of the MFI. Whenever the money flow index has a value that is greater than 80, the market is considered overbought. This means that if the MFI has a value greater than 80, then there will be a high chance that a bearish pullback may occur. And whenever the money flow index has a value of less than 20, it is considered oversold, meaning that there is a high likelihood of a bullish pullback occurring. As you can see, the indicator indeed works quite well just by using this simple strategy. However, we can also see that there are cases where the market is overbought but still continues to soar, or when the market is oversold but still continues to plunge. That's why it's important to not solely rely on the money flow index and instead combine other technical analysis tools or indicators to create a profitable strategy. Before we take a look at such a strategy, let's also take a look at the second way of reading the money flow index indicator. For this method, we will be comparing the MFI with the price action. If the price makes a higher high whilst the MFI makes a lower high, this showcases that the trend is weak and therefore can be interpreted as a sell signal. On the other hand, if the price makes lower lows, while the MFI makes higher lows, this can show weakness in the downtrend, making it a good indication to enter into a buy position. Now that you know exactly how the money flow index can be read and used, let's take a look at a profitable strategy to combine it with. But before that, if you are looking for a broker that has extremely low commissions and spreads, then check out Henko Trade, the best broker to trade forex, indices, commodities, or crypto. They have live chat support so that any questions you may have can be quickly and easily answered. One of Henko Trade's most prominent promotional offers is the matching deposit bonus that can be claimed when you open an account with Henko Trade. Sign up via the link in the description to register with Henko Trade and get access to all of these perks. Let's first add an extra indicator to the chart. Head over to the Indicator Search tab and search for the exponential moving average. We will be adding the indicator made by TradingView to the chart. Now let's change the indicator settings to optimize it for the strategy. Navigate to the Indicator Settings tab and click on the Inputs tab. We will be changing the length of the EMA to 200. Now let's also change the style of the indicator. To do this, click on the Style tab. After that, change the color of the EMA line to yellow. That was all that we needed to do. Now let's take a look at when to enter into a buy position with this strategy. First, we will need for the money flow index to become oversold. This means that the value of the money flow index will need to be less than 20. If the market is oversold, it indicates that the price that the asset is being sold at is below the true value of the asset. Secondly, we will need to see that the price is making lower lows whilst the MFI is making higher lows. If this is the case, this means that a bullish divergence has occurred. When this plays out, it shows us that the bears are losing power and that the, in this case, short-term downtrend has become weak. To confirm that we aren't entering into a trade that goes against the greater trend, we will also need to make sure that the price is trading above the 200-period EMA. If all of these conditions have been met, then we will enter into a buy position. To pinpoint the exact point at which we will enter into the position, we will want to see the price break a resistance zone. As you can see, the price broke and closed above a resistance line here. This will signal that the downtrend has been broken and that a bullish trend is about to start, so let's enter into the position. We will be placing the stop loss at the recent swing low. For the take profit, we will be targeting a 2 times risk to reward ratio, or a point in the market right below a resistance zone, which also provides a risk to reward ratio of at least 2. Now let's see how the trade plays out. To enter into a sell position with this strategy, the following conditions will need to be met. First, we will need for the money flow index to become overbought. This means that the value of the money flow index will need to be above 80. Secondly, we will need to see that the price is making higher highs whilst the MFI is making lower highs. If this is the case, this means that a bearish divergence has occurred. When this plays out, it shows us that the bulls are losing power and that the short-term uptrend has become weak. To confirm that we aren't entering into a trade that goes against the greater trend, we will also need to make sure that the price is trading below the 200-period EMA. If all of these conditions have been met, then we will enter into a sell position. To pinpoint the exact point at which we will enter into the position, we will want to see the price break a support zone. As you can see, the price broke and closed below a support line here. This will signal that the uptrend has been broken and that a bearish trend is about to start, so let's enter into the position. We will be placing the stop loss at the recent swing high. For the take profit, we will be targeting a 2 times risk to reward ratio, or a point in the market right above a support zone, which also provides a risk to reward ratio of at least 2. Now let's see how the trade plays out. There are many ways you can use the money flow index, but I hope that this strategy demonstrates the different methods that can be used to read and integrate the money flow index into your own strategy. If you enjoyed the video, please leave a like and subscribe to the channel. If you have any questions, feel free to leave a comment.